Are we seeing the end of meme stocks? Whether you love stock trading or hate it, this 2023 movie is for you.
How much did we make today?
5 million?
How much did we lose today?
A billion.
Dumb Money is a critically acclaimed film that tells the story of Wall Street Bets, a subreddit that banded together to massively inflate the value of Gamestop. Most of us remember the event pretty well. After all, it was just a few years ago. But it's important to understand how GameStop fits into the rise and potential fall of the so-called meme stock phenomenon. In this video, we'll talk about how the internet allowed people to make billions off companies that had little going for them, and how collaborative investment became more than just a joke. Finally, we'll investigate whether or not the meme stock craze is already over. Let's get started. Thank you for watching this video, but before we begin, if you could, please take a minute to subscribe to my channel. And if you enjoy this, make sure you hit that like button. Also, if you know someone interested in options, please feel free to share this video with them. Now let's get started. For years now, traders have had to live and die, or rather sell and buy, based on the whims of institutional players. After all, these big firms have so much leverage, money, and connections that they can often move stocks and indices to suit their own needs. In reality, it's almost surprising it took traders long enough to figure out that they, too, could do the same thing, providing they work together. Of course, this would have been virtually impossible until the rise of social media. But thanks to subreddits like Wall Street Bets, millions of people can coordinate their buying and selling in ways that can immediately affect the movement of a stock. This alone is impressive enough, yet the internet, as it typically does, decided to put its own humorous spin on things. To understand meme stocks, we first have to understand memes. And what a lot of people seem to forget about these images, videos, and trends is that they are, first and foremost, jokes. Think of the companies I mentioned in the intro: AMC, GameStop, BlackBerry. These are stocks that at the time had little or nothing going for them. While it's true they were losing value and thus presented a good opportunity to buy low, the sell high part of the equation was either extremely unlikely or impossible. But what the groups behind Wall Street Bets did was generate enough buzz around the idea of buying the stock, often ironically, that the price rise became inevitable. As the name implies, meme stocks are often associated with a broader cultural or inside joke. BlackBerry hasn't put out a product since 2018. Wouldn't it be funny if we sent its stock flying? But while the impetus behind the strategy may be a joke, there's no doubting the fact that if the joke gets big enough, so too can the payouts. The term meme stock has become virtually synonymous with GameStop. However, it's important to remember that none of this would have been possible without the economy throttling reality that was the COVID-19 pandemic. Indeed, back in early 2020, the COVID shutdown had led to a surge in retail investors flocking to the stock market. Many of these people had little to no investing experience, but to some, being stuck at home seemed like a great chance to try their hands at day trading. Before long, Reddit groups and StockTwits threads had ballooned with novices, all of whom could talk and share ideas in real time. This brings us to GameStop. As the pandemic rolled into 2021, the struggling video game retailer GameStop became a focal point for a highly unusual investment phenomenon. For starters, hedge funds were betting heavily against GameStop's future, predicting its continued decline due to numerous factors, including the pandemic and changes how we played video games, purchased and distributed. However, a Reddit community known as Wall Street Bets was plotting to profit from GameStop's expected demise. Specifically, they hoped to initiate a short squeeze by purchasing shares in massive amounts within a very short time frame. In January, Wall Street Bets struck. In no time, roughly 140% of GameStop's public float had been sold short. And the rush to buy shares to cover those positions as the price rose caused the price to increase even further. By the 28th of the month, the stock's value had gone from around $17 to at times over $500 per share. But this came with a side effect. Though retail traders made thousands or even millions from the skyrocketing value of GameStop shares, institutions that had taken short positions on the stock suffered significant losses. In fact, by June 2021, it was estimated that hedge funds had lost $6 billion since the beginning of May simply by betting against meme stocks. The little guys, it seemed, had found a way to win big. Of course, GameStop wasn't the only meme stock to experience a short squeeze in the early 2020s. Take Bed Bath & Beyond, for instance. In early 2023, the falling company's stock price surged by an astonishing 68% after it announced plans to lay off more employees to reduce costs and remain in business. This sudden rally followed a period of catastrophic decline during which the company's stock had plummeted by 82% throughout 2022. Again, meme stock buyers were largely behind the squeeze. Though the pandemic had ended, internet investors were anxious to find companies that everyone seemed to be betting against and raise them from the dead for a combination of profits and lulls. AMC Entertainment also garnered significant attention after the GameStop episode. In January 2021, AMC was on the brink of bankruptcy and struggling to address the substantial debt it accumulated due to the COVID-19 pandemic. On January 25, 2021, AMC conducted an equity raise of approximately $500 million and refinanced $411 million in debt, boosting shares from around $2 to $5. In no time, AMC became one of the most mentioned stocks on, you guessed it, the wallstreetbets subreddit. As retail investors rallied together to bet against the shorts, they managed to trigger another massive squeeze. In no time, AMC's stock price had surged more than 300%. Again, the Redditors won and the big institutions lost. But there was another consequence. AMC was able to live on. In fact, the theater company raised a whopping $1.2 billion during the second quarter of 2021 from the meme stock frenzy. This provided immediate relief from AMC's ongoing liquidity concerns and gave the franchise a chance to get its financial ducks in a row. If the AMC story has a bit of a Robin Hood ring to it, you're exactly right. Because in the world of meme stocks, trading platforms have played a pivotal role. One platform in particular that gained prominence was Robinhood. This choice was largely due to Robinhood's offering of commission-free trades, making it an attractive option for traders looking to maximize their gains without incurring transactional fees. Robinhood is extremely easy to use and understand, making it the favorite platform of newbies and often earning it the ire of more seasoned investors. That said, you simply cannot argue with the results. And while it's likely that the results would have been the same if the meme stock proponents used TD Ameritrade or Charles Schwab, the general dislike for Robinhood among experienced traders has only exacerbated the us versus them mentality. While I'm on the subject, I want to discuss the ways trading has already begun bending to the meme stock monster. Perhaps the best example of this is the creation of a meme stocks ETF by an asset manager known as Van Eck. This ETF was aptly named the Van Eck Vectors Social Sentiment ETF, stock symbol BUZZ, and while it's the first to capitalize on the collective enthusiasm and sentiment of social media-driven investment communities, a debate is currently raging over whether or not it will be the last. After all, trading is risky, meme stocks doubly so. While often enticing and thrilling for investors, meme stocks come with a unique set of risks that set them apart from traditional investments. In fact, because the entire strategy relies on getting a one-over in some of the most powerful financial firms in the world, meme stocks seem to be getting riskier by the day. For instance, meme stocks are notorious for their heightened volatility. Unlike established blue chip stocks, meme stocks can experience rapid and extreme price fluctuations over short periods. This volatility is fueled by the speculative nature of meme stock trading, as investor sentiment and social media trends can trigger sudden, dramatic price movements. Again, that's the point. However, the movement isn't always in the right direction. When a large number of people rush to buy into a meme stock, it creates the potential for an equally substantial number of people looking to exit their positions in the short term. This wave of buying and selling can intensify price swings and lead to turbulent market conditions, making it challenging for investors to predict and respond to market movements. Some people on Reddit have reported being up millions for just a few seconds before watching their entire profit margin collapse.
We can put that check in a money market mutual fund. Then we'll reinvest the earnings into foreign currency accounts with compounding interest, and it's gone.
The rapidity at which meme stocks rise and fall has given rise to the term minute traders, as opposed to day traders. But it also poses a significant risk to those who aren't even involved in the investment scheme, because while it's expected that the peaks will be short-lived, the stocks sometimes return to their pre-hype prices or even lower. The final and arguably largest risk comes from the fact that meme stocks often owe their rise to the influence of specific promoters. These influencers can have a huge impact on a stock's performance, sometimes with a single tweet or Reddit post. However, this over-reliance on the power of a single figure can also leave meme stocks particularly vulnerable to the shifts in sentiment or changes in the influencer's recommendations. It's important to remember that while the stock market can indeed be shocked by new stimuli, it is also quick to adjust. So while it's true that meme stocks have captured the imagination of many investors, there has been a noticeable shift in individual interest in recent months. In fact, an article published in the Wall Street Journal on October 15, 2023, highlighted the diminishing thrill of trading individual stocks, with some investors expressing concerns about the risks associated with these investments. As the world faces new threats like ongoing global conflict and increased financial instability, individual investors are increasingly dialing back on risk taken across various markets. So while meme stocks are still active, investors have become more cautious than during the Gamestop era. Rather than these huge company-saving squeezes, the meme stock market is seeking more short-lived rallies of often smaller, heavily shorted companies. These are meme stocks, but mostly in name only. Indeed, several recent meme stocks, including Tupperware Brands, Yellow, and American Superconductor Corp., have tumbled from their recent highs. Retail investors have also been observed selling a net of $852 million in single stocks in the past week, erasing all the inflows that this category had seen since the debt ceiling resolution at the end of May. This caution may be the result of the market's experiences in the previous year, where the average retail portfolio saw significant declines, with losses ranging from 20% to 25% from their all-time high. In fact, just stopping over to Wall Street Bets will paint a pretty clear picture of what is and is not currently happening in the meme stock world. So while there's bound to be more meme-oriented payoffs to come, it seems the newcomers over at Reddit have finally figured out what all traders do. The best way to make consistent money is to play the long game and minimize risk wherever possible. In the end, those are the traders who get the last law. Thanks for watching. If you have any questions or comments, please post them below. And be sure to subscribe and hit that like button. Good luck with your trading.